Morning, Greg, or good afternoon or evening, no matter where you are in the world, everybody that is listening right now. For those of you who don't know me, I am Shahaf Bar-Geffen. I am CEO of COTI. And with us is the glorified Greg Kidd. Hello, Greg.
Good morning.
Morning, Greg. Thank you so much for joining. So if you can please give us some bit of a background about you and your history in payments and cryptocurrencies.
Righto. So I had worked in traditional management consulting with banks and telecoms, had done a startup and taken it public in the marketplace arena, had to do with payments for all the messengers. And that got me really interested in how payments could work better all over the world. So after spending some time back at the Kennedy School in public policy, I went to work for the Federal Reserve in the payments group, where they run the ACH system, the wire system, and the check clearing system for the United States. And stayed involved in that space afterwards with a bunch of ex-regulators while still moonlighting in the startup space. And so on the startup side, was lucky to work with Jack Dorsey in my prior company. So was living with Jack when Twitter got started, and then was the early risk advisor for Square, and was around when the cryptocurrency boom got going, and took an early position in Bitcoin. First money in at Coinbase. Actually took the chief risk officer position at Ripple, and have continued to reinvest the funds from the early startups back in a host of blockchain and digital currency companies, with a particular focus on how to deal with the challenges of cryptocurrency and blockchain, specifically scaling, compliance, and liquidity. And so I'd like to see these alternative currencies be competitive and an alternative to mainstream fiat currencies and used in everyday payments. So some of the products that we've been involved in bringing to market are things like the card for Coinbase, so people can spend Bitcoin anywhere that Visa and MasterCard is accepted. And so the strong push I have is to make crypto fast enough, compliant enough, and have enough cross liquidity so it can be used in everyday use. And my investments and time are focused on that outcome.
And your fund, Yaka, is very active in the payment space. Can you tell us about some of the companies you are involved with? Outside of COTI, of course?
That's right. So key ones have been, I just mentioned, are Coinbase and Ripple, but have been involved in other companies like that have been involved in, for instance, derivatives, so that people can basically take long and short positions to create additional liquidity. Some of the key companies too of late have been companies like TransferGo, kind of a blue-collar version of TransferWise, where people are doing remittances. Some of the other networks are Uphold, which was the first exchange in the United States to let folks do Bitcoin Cash, and some of the other ICO-like trading, which has been difficult in the United States, GateHub in Europe. That's kind of a range of companies I've been involved in. Of late, it's not public yet, but we will make a public announcement, is an investment in a company called Yo-Yo Wallet in the UK, which lets people, kind of like WeChat Pay in China, pay with QR codes. And right now, that money is moving from one bank account to another, but with crypto around, we'd like people that have crypto wallets to have merchants that also have crypto wallets so they can do everyday payments at brick and mortar, and essentially bypass Visa, MasterCard, and the banks and just do payments in real time with crypto.
Yeah, definitely something that we all aspire to do. What do you think needs to happen for cryptocurrencies to be massively adopted that way?
So I think that there needs to be a regulatory environment that is friendly. So if the country has like a ban like China, obviously we need to get that get education with the regulators. We're involved with lobbying efforts here in the U.S. to make sure that a cryptocurrency like Ripple doesn't get classed as a security, so it's too burdened. We need tax policies that are more supportive of using crypto. Currently, right now, when I do spend Bitcoin for Coinbase, anywhere Visa and MasterCard is accepted, that has a tax implication. Every purchase I do is either a capital gain or a capital loss, so the accounting headaches are there. So we need acceptance that some forms of crypto truly are a payment utility rather than a commodity. Those things would help a lot on the regulatory front. Liquidity is really a big issue. People want to be able to get into the currency and out without feeling like there's a lot of friction on paying a margin just to get from the crypto into a fiat currency or not. So all those are areas where, through active lobbying in the local countries, or us actually providing a facility called synthetic liquidity, where we're willing to accept crypto and take a midpoint range and then provide fiat currency to the merchant if they're not comfortable taking the crypto. It is just an issue of making sure that even if a merchant isn't familiar with crypto, the system allows crypto to be spent by the payer anywhere. And it just becomes a preferred option if the merchant thinks that crypto is actually lower interchange rates to accept it. Those are all ways to improve the uptake in the marketplace.
Yeah, for sure. What position do you think stablecoins have in that price stablecoins?
So we tend to think of stablecoins as a great way of doing cash back. So if companies are running loyalty programs and someone comes and pays with a digital wallet and uses essentially a bypass technology like a QR code, they may give a bit more information about themselves. In exchange, the merchant may give a very generous reward. That's what we're doing with Yo-Yo Pay in the UK. And that reward can come in one of three forms. It could come in one of four forms. They could just give cash back, but if they're going to give a rewards currency, it could either be something old-fashioned like points, which are generally very limited in how you can use them, and you can't send them to someone else. You can just oftentimes redeem them only at a merchant where you acquired them or received them. The other is just to have a free-floating cryptocurrency, something like XRP or Ether or Bitcoin right now. The challenge with those is that people receive those and they move around a lot in volatility. If people have an expectation that they're going to go up, they may hold on to them and hoard them and not use them really as a currency. They just use them more as an investment. And if they don't have confidence in them and think they're going to go down, they might just be trying to dump them right away as opposed to letting a balance build up and using them as an alternate wallet. So the stablecoin creates a third alternative. It is a form of cryptocurrency. It can be sent from person to person, but if it's balanced with a basket of either fiat or other currencies behind it, it could be something that people see as not highly volatile, a low volatility form of a reward or cash back, but still is universal. It's something that could be issued in every country in the world, whereas if you give just straight cash back, it would mean for 200 countries, we'd have to have 200 different currency balances for the rewards currency. So we think of stablecoin as a great midpoint between just giving people traditional points and giving them a volatile traditional cryptocurrency.
Yeah, essentially, I see it as just a form of digital money, like annotating money in a digital way and circulating it around. This is one of the things that we've started supporting in COTI. One of the cool things that our infrastructure and trust chain can do is actually issue these type of tokens and as well, and then build stability to it on chain, which is quite rare. One of the issues that we find difficult with payments with cryptocurrencies is we speak with enterprises around the world. They're all keen to try on cryptocurrencies, and they understand why cutting out middlemen can be super helpful when it comes to settlement times and fees. But one of the key questions that they ask is, so tell me, how does users top up their wallets? Mm-hmm. And then we have the issue, of course, of how initially we take fiat and turn it into crypto without paying the immense fees that are involved with actually, converting fiat to crypto to begin with. If you already have crypto, it's quite easy. If you don't, and you want to pay to a merchant for the first time with crypto, you need to top up your wallet. Do you see any solution for that?
Well, what we encourage is that we create an infrastructure where everybody in the world, and I really mean everybody in the world, has an identity, and attached to that identity, they have what we call just a hot wallet. And in that hot wallet, they can hold just traditional fiat currency, but the difference with this hot wallet is instead of just holding their native fiat currency for the country they live in, they have a cross liquidity option that they can hold any other currency, including cryptocurrency. They could also hold a stock or any asset of value. And so once people have a compliant identity and you have the concept of a stored value account, well, yes, certainly people are going to start with holding a balance in their native currency. But as we've seen with companies here in the US like Square and Square Cash, once people already have a balance in their native fiat currency, if it's just an easy option to convert and hold something else, or if somebody else sends you that, or you receive it back as a reward from a merchant, then it becomes perfectly natural to have a multi-currency balance. It's like Revolut in Europe has been very popular for holding multiple currencies. This just takes it one step further and saying one of the multiple currencies you can hold is a cryptocurrency. So, if people are already loading up value or receiving value in the way they do with a WeChat Pay or a Square Cash or a Venmo or a Revolut, just adding crypto to the mix is not a big step forward. It's not additional friction. So for the same motivation that people load up a Starbucks card in the US, we'd like them to have a stored value account. And then it's not a big step, it's a little step just to have a mix of crypto in there as well.
I see. What do you see the upcoming trends with regards to payments, and or cryptocurrencies in the next year, 5 years, and 10 years from now?
So I think that what we're seeing right now is there used to be very separate realms for having a digital wallet, typically just in one currency for P2P payments, and having a stored value account usually attached to a debit card, and having a money transmitter service, including having the ability to hold multiple currencies. In the future, we see those three realms: the ability to have a stored value account with a card, the ability to have a P2P payment system, and the ability to have a multi-currency wallet, all merging together. Like, it's hard to imagine why someone would have a digital app on their phone that didn't do all three of those things, because they all involve money. They just involve just different situations, and the world is pretty global. So while most people will be still familiar with their own and just use their own base currency, we travel a lot. We like to hold different things, that we like to speculate a bit. So why not just have that in a single digital offering? And so I think what we're going to see is people that are, or firms that are strong in one area are going to get into the other area. Square will invade the space that Revolut is in, and vice versa. The space that TransferWise is in, folks will get into that, and TransferWise will move the other way. We've seen it with the company Robinhood, which started out for being stocks and has added cryptocurrency. There's really no reason why a company like Robinhood wouldn't have a payment card so that you could spend a bit of your Google stock or your crypto or your just fiat currency anywhere that MasterCard or Visa is accepted. And we'll also see the beginning of a merger of loyalty programs. Just traditional loyalty programs will move to integrate with these wallets, so that merchants are also willing to take these new forms of funding rather than having to have the money immediately in the bank in traditional fiat currency. So as merchants get comfortable holding these new forms of payments, the digital wallet that make these new forms of payments, it becomes a virtuous ecosystem. I think China, though not doing crypto, has gotten very far ahead in the digital wallet space with WeChat Pay and Alipay. It's a very Chinese-only, Chinese-centric solution because they have a lot of currency control flows. But the reason for our investment in Yo-Yo Pay is it has a lot of the qualities of what's going on in China including integration with point-of-sale systems and digital wallets. We see that as something that we could then spread to the rest of Europe, the rest of America, the rest of the world. That's the short to medium term outlook. Long term, I believe that everyone will have a hot wallet, that traditional banks will still be there, the Visa MasterCard networks will still be there, but the banks will be more like vaults, just like the phone companies became more about the pipes rather than building all the applications that are used on the phones. And that Visa and MasterCard, we think of them as a great trust network for identity. They'll have to sharpen their pencils because if their interchange rates are too high or their settlement times are too slow, folks will just have bypass arrangements that will go around Visa and MasterCard. That's the road further down. And part of the reason for our investment in COTI is we see that as a lead alternative to the Visa and MasterCard networks long term, is to create another trusted network between payors and payees that has a speed of settlement, low cost, and it's really open to everyone, because Visa and MasterCard still exclude both certain classes of payors and payees.
Despite the shortcomings of Visa and MasterCard, why do you think they are able to dominate the market for the past, I'd say, 40 years or so?
Well, they made investments early on. They took losses for a long time to build an authorization capability that was global. When all the payment systems in the world are built on national rails, and many of the digital wallets have been, again, on a company or national or both basis, there was no product that made you able to essentially go overseas and with confidence know that you weren't going to have to come up with cash for payments. So their reach has been awesome, and people have been willing to pay very high interchange and FX rates to have that peace of mind that the system works internationally. The other thing that Visa and MasterCard invested in was an authorization network that meant that they could process 25,000 transactions per second. And one of the challenges of crypto, especially the slow speeds of Bitcoin and Ether, and even Ripple, which is faster, is not nearly fast enough to do the authorization in real time. And so Visa and MasterCard focused very heavily on what the time was, and it's less than 3 seconds for a merchant to be able to get an authorization globally around the world. And without that, forms of digital money don't scale down to the payment because people would be standing in line too long. And so Visa, MasterCard, and of course there's American Express and now China Union Pay, but Visa, MasterCard really led the way at getting high accepted rates for alternatives to cash operative around the world. And they're reaping the benefits of that, both in terms of growth and profitability today.
I see. And how do you see disruption actually coming? How do you see this duopoly breaking eventually? What needs to happen?
So I think that right now Visa and MasterCard, in addition to being settlement rails, they are a form of identity. The people that are merchants that can take Visa and MasterCard are known to Visa and MasterCard. The people that can pay are known to the banks that issued those cards. With alternate systems of identity that are coming out that are self-sovereign, the uniqueness of the Visa MasterCard identity provision begins to erode, and people have other ways to prove to the merchant at the time of sale that they are who they are, and the merchants have other ways to take that payment in a way that's secure and private. The limitation of Visa and MasterCard is they're not integrated into the point-of-sale systems to the extent that if the merchant has an inventory system, it's very difficult for those systems to pass to the payor information about what was in the basket. The flip side is if the individual who's buying either wants to have more privacy and give up less information to the merchant, or wants to give up more information in exchange for a bigger discount, Visa MasterCard is a one-size-fits-all solution. It really is a settlement network. It's not a network for exchanging data. So one of the things that we're excited about is if you have a different set of settlement rails, you can increase either the richness of data passing between the merchant and the buyer, or you can increase the privacy level. You can have a proxy stand in between, so the merchant gets less information about the payor. And so these options allow merchants to have tailored programs and to better serve end users, and end users have better options for preserving privacy with what they do if they so choose. And so that was not available to the market before sort of the innovations in the last 5 years with identity and digital rails, and just basically big data, the ability to integrate deeply into the point of sale systems. And so that's all now possible. It really wasn't being talked about 5 years ago.
I see. Yeah, and I think again the sort of insights that can come with more data are crucial to merchants. Okay, I'm going to look at some of the questions that attendee asked. We have quite a few. James asks us. He says it's a great webinar. Thank you, James. He asked, why eliminate credit cards altogether? Wouldn't credit card companies benefit from blockchain technology?
So yeah, we're not anti-card. In fact, one of my companies, I'm a lead investor in Shift. We issue cards. We were issuing cards for Dwala white label. We issue for Venmo, although Venmo's now at a scale where they're going to bring that in-house, and we're still issuing for Coinbase in the US and moving through Europe. And the difference in terms of how we think about cards is we really do call them cards as opposed to a debit card attached to a single account, or a credit card, once again, attached to a single account that lets you basically spend money regardless of whether you have it and then make it up and pay it later in the month or revolve that credit line. So in our vision of the future, we're not anti-card or anti-phone. We're just, both the card and the phone are a token for your identity, and you ought to be able to attach that to whatever account you want. So at the time of payment, you should be able to spend from any account that is stored value. And so yes, that's a debit, or you ought to also be able to spend from a credit line, actually spend money that you don't currently have or have in an account yet. But we don't think of that as a debit card or a credit card. We just think of that as identity, and you're using card to access those stored value balances or those credit lines. And so what we see is actually an expanded use for cards and mobile phones, depending on which token you'd like to use, as a way of proving your identity at the time of a sale. And then the money just flows over whichever account, debit or credit, fiat currency or crypto. It just all becomes a possibility. So we're quite strong that cards are, work very well. You can argue whether what the time is to scan a QR code versus swipe a card. China is much further ahead with the QR codes. UK, the swipe times that we're seeing versus the QR code read times, we actually in the UK have the QR read time faster than the swipe. So it's 1.7 seconds for the QR code purchase versus 3 seconds for the card purchase. So we do believe that the QR code uptake can happen, but in places like the US, almost nobody uses QR codes. It's all card-based. So there's a bit of cultural baggage, and some countries are just much more comfortable with phones, other with cards. To us, we're not trying to pick a winner or a loser there. We think both are good tokens of identity.
Yes, with that in mind, Anita wants to ask us, what is the most exciting payment technology you have recently heard of?
Wow, something new that we're seeing in the marketplace.
Yeah, and you're excited about.
So we're very interested in some of the alternatives to proof of work with cryptocurrency. There was I was an investor in Filecoin, which is proof of stake. But some of the new things we're seeing are around what we call proof of history or proof of time. And there are technologies that would let a blockchain scale well beyond the levels that Visa and MasterCard have achieved, up to hundreds of thousands or even millions of transactions per second. So one of the three challenges of blockchain, besides compliance and liquidity, has just been pure speed. And if we can get to a ledger that can process that quickly, it is possible that we could have a universal ledger for the world that everyone is attached to, and it could actually keep up with the transaction processing speeds. And so instead of having to like move between ledgers, you could actually have the poker game, if you will, all played on this one very, very fast ledger. And it isn't resource intensive like the proof of work model. So these new blockchains that are based on what I think oftentimes they call it proof of time, that there's a time stamp that allows you to basically settle in parallel rather than in a serial fashion, solves one of the big challenges in the digital currency space. So I'm excited to see whether that's smoke and mirrors or whether we can actually get those systems into production for everyday use.
Yeah, with that in mind, it's worth mentioning that we've recently, 2 weeks ago, we've launched on GitHub our AlphaNet, which can now process about 10,000 transactions per second. So we're getting to the where we want to go, and I think one of the key things that we've done, of course, is develop a new proof of trust mechanism built over a direct acyclic graph that allows for parallel computing and achieving consensus in a much faster way with very little energy consumption as it's done today. We think it's key to what we do. Yes. Someone here Gabby is asking us, it says there's a number of projects currently focused on the payment industry. What do you think is necessary for a project to achieve a breakthrough?
So I think that for a breakthrough on the level of the Chinese model, where you have essentially trillions of dollars being spent, I think it would be very helpful. And I often say I'm not in the fintech space, I'm in the regtech space, is to have clarity from the regulators about what can and cannot be done. So one of the things that I'm challenged with right now is knowing whether if we have a token that is going to be used as a rewards and as a payment currency, whether that token will be treated as a security or not. Whether that currency will be legal in the United States, whether it will be legal in China, whether other countries in Europe are looming and are about to basically essentially interfere and outlaw the concept of a digital currency that is fungible and could work globally. I sat at a meeting recently of national banks presenting each of their own schemes for digital currency. It was the United States, China, the Philippines, Egypt, Norway, Brazil, all gave presentations. And in each of their presentations, the thing that was not very comforting was part of their digital strategy for their country was to outlaw everything else in their country. And so, one of the questions I had, well, if you're going to outlaw everything else, and are you going to restrict the currency to just being used by your own citizens? And they're like, well, probably. Like they didn't really even have a thought about this. Well, what about trade? What about remittances? What about tourism? They're like, well, we haven't really thought about those things yet. So if your gut reaction is that outlaw things are going to work for those three use cases, I really don't know how those digital currencies are going to work. And if you're going to like give yourself a head start by basically making everything else illegal, that doesn't really seem like progress for humankind. So regulatory clarity and a willingness to let solutions work not just on a national basis but on a global basis seems critical to me to like make it possible that if there is a success in one country, it can spread to other countries. So we'd like to see the uptake rates of China, but in a way that is trans-border and works around the world, as opposed to such a siloed solution.
Yes, indeed. Another question that we have from David here is, what's the selling point of digital currencies to consumers versus merchants that naturally have a lot to win with regards to fees and settlement times? What's the selling point for a consumer that doesn't usually see the downsides of fiat currencies?
So I'm a bit older than probably the audience here, and in my country we had back in the 1960s something called green stamps. And green stamps was a rewards currency that almost all merchants gave. Over 70% of merchants gave green stamps, and over 70% of households gave them. And what that meant was you had a secondary currency that people kind of felt was like a bonus currency. And you might say, well, why would people want that or like that as opposed to just getting cash back on their existing purchases? And what it turns out is that human psychology is very powerful. And when people have this second form of currency, they use it for things that they normally wouldn't spend it on, or they would feel guilty about spending just regular cash balances. And so if you actually search on Google for green stamps and you look at some of the videos, it's pictures of consumers buying things like that blender that they wouldn't feel they deserve, but with their green stamps, they were willing to make that purchase. And so you get another form of behavior when people have kind of their happy money. It is also a global form of currency, and so it becomes something that is portable across different boundaries. And it also creates potentially, just like there's a whole ecosystem and marketplace around how people use bonus points that they get from the airlines, that has become a whole thriving economy and ecosystem in and of itself. And so what we're really looking for is to have a psychologically different kind of currency that really is associated with rewards and is portable around the world. There was an economist called Hayek who wrote, an Austrian economist who talked about the concept of private currencies and competing currencies as an alternative that was better to fiat currencies because they might have, for instance, a lower tendency to have inflation. They might not be debased like fiat currencies have been in other countries. And so it is possible to have a cryptocurrency that is actually more trusted than any fiat currency, and this is really the objective of stablecoin. So on one hand, you have a currency that may be more fun and playful. On the other hand, you might have a currency that is simply more trusted because it has less volatility than any other currency, including less volatility than the US dollar or the euro. That would be a stable coin by design. And so all of those are reasons why an alternative currency and a digital alternative currency may have a big place in the future of our lives.
I see. Amazing. Last question that we have here is with regards to the current state of the markets and the flux of fake news stories, the bear market for crypto. Do you foresee or can predict a turnaround?
So again, I'm old, so I was around for the .com crash, and so many of the .com companies, pantyhose.com, pets.com, Webvan, they all came and went in a short period of time. There was a lot of froth in the market. But out of that period of time, the eventual dominant titans, some of whom dominate the top of the cap table today, companies like Amazon and PayPal and Google did come out of that. So I believe there's going to be a lot of train wreckage out there from companies that are just sort of jumping on the bandwagon. But I believe that 10 years from now, or definitely 20 years from now, a set of the top companies in terms of market capitalization are going to come out of this new arena where people are creating new forms of value and payment that have a real purpose. Many of the others are just, as we said, Me Too companies, but there's going to be a shakeout, and so it is all about picking quality. There are very few companies that have a token that I've actually personally invested in through the fund. COTI is one of them because COTI, in our minds, solves a real problem. And so once all this quality is shaken out, there will be a return and a focus on which of these things are real. COTI feels very, very real to me. So we're in for the hunt with COTI because we think that in the future, an alternative form of currency and an alternative form of payment rails will exist. Visa and MasterCard are not broken, but they certainly haven't been innovative or really brought new things to the market in the last 20 or 30 years. Banks are not broken, but again, we're not looking for the innovations or the future of how payments are going to work to be coming from the banks. If we want to live in a world that works more like Star Trek. There are going to be a lot of wrong turns along the way, but COTI and a small collection of other companies that are really working on that problem with focus are going to come out the other end of this sort of crypto ICO winter, and they'll be positioned to get the work done. And so just want to be there in the front row seat for that. And it is buckle up this year. I think the crypto winter is here. But 18 months out, I think that this will be a big bump in the road, but we'll be working with a handful of a couple dozen companies that have come through this and are stronger for it.
Thank you. That's great to hear. Greg, we're out of time. We want to be cautious of your time. We know you are very busy. How can people follow you and what you write and do?
I'm just Greg Kidd on Twitter. I wasn't in the first 10 people to use Twitter, but I was definitely in the first 100. But that's a good place where I will post things that are related to this space. Thanks for your time.
Thank you, Greg. Thank you so much. It was great having you, and hope to see you soon in San Francisco.
Very good. Take care and good luck.
Thank you. Goodbye.
Bye-bye.
Thank you, everybody, for joining, and all the other questions that have been asked and we couldn't address, we'll do a Medium post and answer all of that. Thank you so much, everybody. Bye-bye.